is sponsored by Traders Central. Traders Central provides funding for traders, spot cryptocurrency exchange services, and access to trading tools like copy trade software, portfolio tracking, and a social platform exclusive for communicating with your trader friends. Sign up now using the link in the description and get up to 30% of your first plan. Hello, good afternoon, good morning, good evening. I hope you can all hear me loud and clear. So, let's do the first thing first. So, if you can hear me loud and clear, say yes. I can hear you loud and clear. And then what we do is we're going to move forward. Okay, so I need you to say yes. I can hear you. Sound okay? No echoes, everything good? Then we can move very, very fast and forward. Okay. Who is giving me the go ahead here? Who is going to give me the go ahead so we can move forward, right? Yes, loud and clear. Thank you so much. You are a star. All right, you are a star. Vincent, thank you. Demi, thank you. Brilliant job. You did very well. All right, ladies and gentlemen, my name is Dare. You know me already, but let me introduce myself again to you. Maybe you are hearing me for the first time. I got introduced by a friend who trades stocks for over 20 years. So he introduced me to stocks, but once I jumped in, I decided that, look, it seems like Forex is the one for me. So I jumped into Forex trading right immediately. I didn't do any research as such, like many of us will have done. I opened my first live account almost straight away. Okay, I signed up with a broker at the time. This broker continually requotes me. So, needless to say, within 4 weeks, I blew my first account. Gone. So, one of the reasons I was using a strategy which I found on the internet. That strategy seems to be working, like for the very short period I tested it, and that strategy failed. So I lost the first account. So having lost the first account, I was contacted by a professional company. They said they are good traders. They would trade for me. I thought, well, maybe because I couldn't do it the first time, maybe let me let the professional do it this time around. So I gave them money to trade for me. In fact, they came back. They said, give us more because we are going to give you a huge return. I said, okay, look, no problem. You are professionals. They speak very good grammars and English, like English accent. I said, oh yeah, this must be good guys. So I gave them quite a lot of money. And to be honest, the first few days, they said, check your account. They have the broker. They have everything. I just put money there. I checked the account. Truly, it seems to be okay. First few days. And after a week or two, it started going downhill. So when I noticed that my account was going downhill, I said, guys, what's happening? I'll say, oh, we'll fix it. Anyway, cut the long story short, they blew this account within 4 weeks exactly, less than a month. So say, wow. And this is quite a lot of money they blow. And this is not me trading. So I thought, wow, what's going on? So I thought this could be the last mistake I'm going to make. But I decided then that, look, if I'm going to trade at all, it has to be myself doing the trading. I'm not going to give my money to anybody again because I've seen what they did. But I still made another error. Okay, this time around, I wasn't so much confident about trading on my own. And I got introduced to this world of Forex robots, expert advisor. I was following 2 of those expert advisors very keenly. I watch how they trade. I see all the performances. I see everything. In fact, they have my FX book for these 2 expert advisors. So I said, look, nothing can go wrong. So I went for it. So I went for these 2 expert advisors. Cost me over $1,000, around about $1,000. So thinking that is the holy grail. Wow. You know what happened? my account got blown again. Man, are you counting it? Okay, so it got blown away because this EA was taking too many trades. It was over trading, and there's nothing I can do to correct it. Okay, so at this point, now I'm nearly going to give up because I have two options. Either I give up now or I find solution. So I choose the latter. I said, look, I'm going to find a solution. So what I did was I set myself a challenge. I said, I will have to build a strategy that works. If I succeed in building a strategy that works, I will stick to it. Otherwise, bye-bye to trading. I'm going to quit. So in order to achieve my objective, I thought the best thing to do is to actually start properly. So I found myself a true mentor. Okay, I found myself a true mentor. This mentor developed an indicator which turned out to be one of the honest that I've seen as at that time. It wasn't a repainting. It was truly good indicator. So now I built my first strategy based on this mentor's advice. So I built my first strategy because I learned how to use that indicator, and from there I coined out my own niche of a strategy. So after testing my strategy on a demo account, then I opened another live account. I hope you are counting now, right? But this time around, following what I've decided not to give money to anybody, so I traded it myself, and I used my own strategy this time. Okay, so because now I have some market understanding and I know about risk management from my mentor, so he told me a lot. So my resilience, my effort paid off, because the first month I turned a profit for the first time ever. I made a profit. Profit. I've never seen a profit before. So I made a profit first month. So, and on since then, I've been consistently profitable. Okay, so what I've done since then is to build several of these winning strategies. And you could have gone to my YouTube channel. You see some of those strategies, and some of the people on our forum, in my group, they know about some of this winning strategy. So as you know, that I've coached hundreds, if not thousands of students. So I exactly know the difference between a successful trader and a trader that is not successful. You know, sometimes it's not just the strategy. You know, you really need to find somebody to help you understand the areas that you are struggling with. It might be very small area, but you yourself, you might not understand, or you might not really know that is the drawback you have. So, but once you sort that a little bit out, you are going to see that there will be a tremendous difference between then and later on. Okay, so that is my story in a nutshell. As you can see, I've told you my story. I know you got stories to tell as well. Everybody has got story, okay? But what I want to say again today is to give you a strategy. I want to give you a one powerful strategy that is going to help you. So this strategy is ready. I mean, this strategy you can use straight away. So I'm not going to hold anything back. I'll give you all the conditions to get into a trade, to exit the trade, everything you will know about this strategy. All right, are you ready? Let me know if you are not ready. We're not going to go forward. But if you are ready, we'll go forward. All right, are you sure you are ready? Okay, so I call my strategy the double MACD. Okay, double MACD strategy. Okay, but before we talk of the double, right, let's talk of the single first. Let's talk of what is MACD. Okay, what exactly is MACD? All right, you have been hearing MACD. You know about MACD anyway. Most people know, most of you know. It's the acronym for moving average, convergence, and divergence. Okay, it's just a trend following. So you're looking for it's a trend following indicator. It's also based on momentum, right? And what it does is find relationship between two moving averages. You can call it slow moving average and fast moving average. So the difference between them is called the MACD. So simple, all right? Sometimes you see the slow moving average, you can say, is 26. The fast moving average, you can see, is 12. So when you compare these two, the line between them, the difference between them is called the MACD. So simple. All right. I hope you're following me. So I'm going to take you through a little bit of training on that. So you might want to get your pen and paper if you want to, but you can actually look at my screen, and that will help you. Okay. All right. So if you have any questions while we are ongoing, please don't hesitate to shout and I will help. Okay. So we have talked about what is MACD. We are going to look at two settings of the MACD, 12.26.1, 5.15.1. Okay, we're going to look at these two settings. We're going to look at trend entry signal because we have different signals from this MACD. So we have the trend entry, we have the re-entry, we have the counter trend, and then we have the divergence signal. 4 signals. One of the signal might be your special interest. You might like one more than the other one. That's fine, but just watch and look for those 4 different type of signals. Pick the one that is best for you, or you can take all the 4. Right. So let's look at it. So we're gonna look at the first. What is MACD? We've talked about it. So it's just an histogram. Okay. And then there is a 0 line. When you look at the indicator itself, this is how it looks. There's an histogram, and the difference between those two moving averages is plotted as the MACD SMA, simple moving average. That is the difference between those two moving averages. You have a line here, you have some histogram above it and some histogram below it, and the middle line. Okay, that's a simple MACD. Right, now what we want to do after you have seen the simple MACD is we want to have 2 settings. We want to have 2 settings. One is going to be the big settings. The other one is going to be the smaller settings of the same MACD indicator. Okay, so let's go and do the first setting, which is the bigger setting. The big settings. So we call that settings 12.26.1. Okay, you know, when you put MACD on your MACD indicator on your chart, it comes with the settings of 12.26.5. So in this case, you just change the 5 to 1. So that is the first settings. Okay, let's look at what we will need in order to take signals. So let me describe it very simple. So when MACD is above its 0 line, you say the price is in an uptrend. When MACD is below its 0 line, you say the price is downtrend, or the instrument is going downtrend. Okay. You know there's going to be 0 line for this MACD. Okay. Let's look at the second one. It's a smaller one. It's nearly the same thing. Okay. The difference is just the settings. This time around is 5.15.1. So this is the fast MACD. So you got the slower MACD and you got the fast MACD, or you call it the big MACD and the small MACD. So this time around we use a color yellow to denote it. The earlier one was white. So similar stuff. When the MACD is above 0, we say we are in an uptrend. When MACD is below 0, we say we are in a downtrend. It also has its own 0 line. Everybody has got their 0 line, right? Now, what we are doing next is we are going to combine these two together. We're going to put the smaller and the bigger MACD, put them together in order to generate signal. You know, you can generate signal from individual MACD, but we are combining these two together to make a signal. Okay, so we will get to the time zone or time frame later on. So this is just the construction of the MACD. Okay, so now you have the 2 MACD on top of each other. So notice that when you put them together, you have 2 separate lines. There will be one line for the white MACD there's another line for the yellow MACD. Sometimes when you scroll in your charts, you will soon see both of them can coincide together, looking like this one single line. But always remember there are two lines there. Okay? And now, we are now going to look at how to generate signals using these two MACDs. Okay? The most important thing you should remember or should note is the zero line. Zero line is very important for our first signal type. So we call it trend entry. Okay? Trend entry. As you can see, trend entry is whenever MACD crosses its zero line. Okay? Which of the MACD? The yellow MACD. When yellow MACD crosses its zero line, we say we are going to take a trade. But when it crosses zero line, just watch what the white MACD is doing at that time. So hopefully MACD is the bigger one will follow in the same direction. Most of the time it is following the same direction. So but you don't have to wait for the white to cross. You only want the yellow to cross and then you take a trade. Okay, so let's see. Let's look at this first. This is a sell trade. You can see MACD crosses here, and that's a sell trade. This is another sell trade. The yellow crosses there, another sell trade. What about here? Another sell trade. Now let's look at here. This is a buy trade. Yellow MACD crosses zero. Okay. The first trade here is a buy trade where MACD crosses zero there. The yellow MACD. Always see that white MACD is also pointing in the direction. Also here, when yellow crosses down, white is pointing that direction. When yellow crosses down, white is pointing that direction. When it crosses down, white is pointing that direction. And here, when it crosses up, the white is also pointing in the same direction. Okay, so that is the trend entry signal. For this signal, I'm suggesting 40 pips take profit. Okay, somebody asked a question of time. Yes, so we are going to use two time frames. One is 1 hour, or we use 4 hours. But you are not fixed to those two time frames. You can change any time frame you want. But for the back testing we've done it on these two time frame, which was very profitable. Okay, so when you use 1 hour time frame, your take profit target could be 20 pips. But when you use 4 hour time frame, your take profit target could be 40 pips. For your stop loss, we have two types. One is fixed stop loss. Fixed stop loss. Fixed stop loss, we are going to use a fraction of the take profit. So let's say you have take profit of 20 pips. Half of it could be your stop loss. So that is fixed stop loss. But the other stop loss is to look for the swing high or swing low. When we get to the actual chart, I'll show you. Swing out or swing low. Let's say here, you take a sell position here, right? From here, you take a sell position. That is the swing high. That will be your stop loss. You put your stop loss line here, okay? Similarly, when you buy here, right? When you buy here and you went long at this point, this is your swing low. Your last swing low, you put your stop loss here. So that's a good method because this one is very flexible. It adjusts with what the price action is saying. But the fixed stop loss doesn't adjust. It's always going to be 10 pips stop loss or 25 pips stop loss. So it's not very flexible. So this is more flexible than the fixed stop loss. All right. So that is the trend entry. I spent time here so that when we go to the next one, you know what our stop loss is, you know what our take profit target is. Next one is the second entry signal, which we call it re-entry. This is the first one, which is trend entry. The second one is re-entry. Why is it re-entry? Because we first of all got into a trade with this trend. And if we need to get back into that trend, we use this second strategy, re-entry. So you remember that we have got into a trade here. Let's say we got into first trade here, which is a buy. Okay, so we've got into a trade here, which was the trend entry, the previous signal. Now this trend is now going on, like USD JPY has been going on now for the last 3 or 4 trading days. I'll show you the chart later. And then you want to get into that trend. You are not sure when you should get into that trend. This will help you. This re-entry will help you on any instrument at all. So what you need to do, watch out for yellow MACD. If you have a trend that is going on and yellow MACD buck the trend, go against the trend very momentarily, and then join again with the trend. Like here, you can see the trend is uptrend. That means we are above zero line, and momentarily MACD, yellow one, smaller one, went below momentarily and then come back again to resume the uptrend. Note that the bigger one, the white MACD, never crosses below, never go below zero. That means it retain its own original uptrend. So when there is a deviation of the smaller MACD but later on corrected itself, that is what we call re-entry. So you are going to go back into this trade. This trade has started here. It was uptrend, it was going, but you don't know when to get in, because you might want to get in here, but if you get in here, you are getting it at the wrong time. Remember, some people will say, oh, price is going up, let me buy. Well, if you buy, you may be buying at the top. And what happened is, if you bought here and you have a smaller stop loss, you'll be taken out. But instead, you need to wait until you have a re-entry signal. So you got this this retracement, and then when the trend resume and the smaller MACD give you a re-entry signal, then you enter your long position again. That's it. Super professional. You did it well. And then you can put your stop loss behind the last swing low, either here or you use the fixed stop loss as we have suggested before. So that is second one. Now you know how this works now. So we are going to get into the third signal. So the third signal is opposite of these two that we are talking about. The first one is trend entry. The second one is re-entry on the same trend. So both of them are actually trend direction. You are going in the direction of the trend. The first one is to buy when MACD is up. The second one also is to buy when MACD is up. Now let's look at the third one, is the opposite. That is why we call it opposite of the trend. We call it counter trend. Why do we say it's counter trend? Because you are going to be trading against the trend. So let's see here. You see we have got into a trade right here. And when yellow MACD then crosses the white MACD, it generates a counter signal. Okay, that's a counter trend signal. Also here, that's a sell, right? So that's a counter sell. So that's why we say it is counter trend. Why? Because you remember that we've already said that we are in an uptrend here, and suddenly we are selling in an uptrend. That's called counter trend. This type of trade, sometimes it looks very, very good, but you got to be very sharp and quick, and don't look for too many pips in terms of profit. So you have to hit it fast and get out, because you are going against the trend. The trend might change. If that actually was the point at which the trend changes, super, you are a star. But if that is not a trend change, if that is just a correction, a short correction, and you're already in that trade, see the reason why you have to get out quick, because it could reverse. Just look at here. It's a small correction here, and you already counter trend here. You have already sold. Well, a clever trader will know that he doesn't want to stay here for long, because the trend might continue, which you see it does continue. So hit it fast. So for this strategy, or for this signal, I am proposing to you to use 10 pips. or half of the take profit of the other two signals. So if you are trading 1 hour chart, use 10 pips. If you are trading 4 hour chart, use 20 pips as your take profit target. So the same thing apply here. We are below we are below MACD line. That means we are downtrend, but we got a counter signal to buy. Okay, we are above here. We got a counter signal to sell. If you look here, there could be a signal here to buy here. There's a signal here to sell, counter sell. You can see this one looks a better one, right? Because at that point, the instrument actually is defining a trend. So it's changing trend actually at this point. So this is like a trend change compared to here, which is just a retracement. So when you get this type of trend change, yes, you will be in the trade for quite some time. But if you get a shorter things like this, which is not actually a trend change yet, it's just a bit of correction, then you have to get out fast. So in all locations, try to get out fast because you are not sure whether it's a trend correction or it's a trend change. So here also looks to me like the trend change here. Okay, here it could be a good trend change as well. So this is counter trend signal, right? So that is the third one, and we are going to move to the last type of signal, which I called divergence. Okay, I call it divergence because you got to look for the difference between what the price action is saying and what the indicator is saying. So once you're able to find the difference, that is what we are going to use to find our signal. All right. If you know about divergence already, there are divergences on different indicators. You can find divergence in MACD. You can find divergence in stochastic. You can find divergence in ATR, whatever that is any type of indicator at all. You can always find divergence in them as well. So that means this, you can use some other indicators to find divergence. Okay, so of course there are always two sides to a coin. Yeah, there's going to be bearish and there's going to be bullish divergence. But first thing is to look for the divergence. As I said, divergence is when there is a difference or opposite what the price action and the indicators are doing. Both of them are saying opposite things. So price action here is telling us we are moving from a lower high to higher high. Indicators say we are moving from higher high to lower high. So both of them one has to be right, the other one has to be wrong. Both of them cannot be right because this is let's say this is where you are now and you don't know what is going to happen next. You are right here at this point. So price action is telling you, whoa, we are making a new high. We're making a new high. So price is rising up. And the indicator say, hey, wait, Mr. Price Action. You're actually not moving higher. You're actually going lower. Although you are making a high, but your high is not as high as the previous one on the indicator. But on the price action, it's actually higher. Well, usually price action should be the determinant factor, but for indicator-led divergences, you take your cue from the indicator. So that's why you put the indicator there to guide you. So this indicator is now indicating to you that price is going to fall because of this divergence. So as you can see, price also fell. So it's not easy to find these divergences yourself. You can find it. It's not too difficult, but there are indicators that can help you to spot these divergences on charts. So once you spot the divergence, and also you can see after the divergence, the MACD crosses the line as usual, as normal trade. So the difference now is that you have confirmation. The previous trade, there is no confirmation. You just enter a buy or a sell where MACD crosses zero line. But this time around, you got a chance, you got opportunity or a confirmation, second thing telling you you are right. The first thing is the divergence told you are right, and MACD also confirm it. So this is going to be a stronger trade. Okay, let's look at the second divergence, which is the bullish one. It's just the opposite. Bullish one is also difference between price action and indicator. Price action here is saying the current low is lower than previous one, so we are going to lower lows. Whereas the indicator say, hey, wait. My current low is not lower. My current low is higher, actually. Oh, I disagree with you. Man, I disagree with you, Mr. Price Action. My current low is higher, whereas your own current low is lower. Well, who is going to take the credit? Usually we give the credit to the indicator because that's what you're trying to use it for, to guide you, to lead you. Okay, but some people don't trade using the indicator. They use bare price action. In that case, you don't even have to rely on any indicator or use anything. You just go with your instinct or use your price action knowledge. So here you see we got a divergence between the two, and usually the indicator, you are going to follow what the indicator says. Indicator says, well, higher high, then price will go up, and as you can see, price went up. And once you have that confirmation of divergence and you have MACD crosses the line again, just like before, you have two confirmations. One is that the divergence has happened, which the indicator is telling you price is going to go up, and then you have a patience to wait for the MACD to confirm it. And after confirmation, there you go. You have your answer. All right. So those are the four types of signals: the trend, the re-entry, the counter trend, and the divergence. So for this divergence, you are going to use the same take profit and stop loss as the other two. So 20 pips for 1 hour, 40 pips for 4-hour charts. So if there's anything that is missing, let me know. Ask the question if there's anything missing here. Say, for example, you didn't get anything right. We're going to go into the chart to demonstrate it. So let me know. So I'm going to show you I'm going to leave you with a summary of what we have talked about. So just for you to put it down in case you are still be confused about what is what crosses where. So this is the summary for the short entries. So this is the summary for the short entry. Is just exactly what we have discussed. Okay. Hello, Dave Emperors. Hello. TBI, how are you doing, TBI? Thank you for joining us tonight. All right, thank you so much. Fantastic. Fortunate, thank you. Fortunate, Vincent, thank you. Oh, Haman, thank you so much. As usual, Demi is always here. Okay, so that is the short trade for you. Let me take you to the long trade rules. This is the long trade rules. They were exactly the same thing. What you can just notice is just a take profit target. This is what we have explained by discussing, and this is just a summary. You may want to take a screenshot, or you want to write it down. But nevertheless, you remember this video is recorded anyway, so you can always come back, enjoy it, relax, enjoy it, and practice it. Practice. I told you about my mentor. My mentor, he held my hand, said, hey, this is what you are doing wrong. Why don't you try this way? Why don't you test this one? Why don't you correct it, test it on demo first, or use a sent account? And I listened. I do listen. And some of those things that I normally do they call it automatic, some things that you just do unconsciously, that happens without you even thinking about it. Yeah, autopilot. Some traders are autopilot. So once they open the chart, they look at the chart, suddenly they see a trade. Before you know it, they're onto the trade straight away. Why? Because they have been wired to think that any trade they see in their mind is going to be a good trade. But instead of analyzing it second time and look at it critically, but they jump for it. But once they jump in and they satisfy that urge, that emotions, that ability that yes, I can do it, I want to trade. And once they get into the trade, 5 minutes later, they realize that, oh man, no. Oh, no, that's not the trade. See, MACD hasn't crossed. Oh, the moving average is still trying to cross. Oh, the candle has not closed yet. Why did I jump in? Okay, so these are the kind of things that you have to cut out of your trading life or trading career. Otherwise, it's going to be very not helpful for you. Excellent. All right, so we know now our long trade rules. Okay, so after this, what we're going to do next is now we're going to go into practice and we're going to look at exact charts. So I'm going to spend some few minutes there. Okay, after this, I have something to show you about what we do. So our mentor program, I'm going to show you. So be patient because I got something very, very good to show you later on. So I'm going to show you first of all we have talked about in live session, in live training. Okay, so now you are looking at this indicator here. You can see the two lines I was talking about. See, they look separate here. They look separate. But if I scroll around, let's say, if I scroll, look, they look closer here. Okay, but if I scroll more, sometimes they look like they are wide apart here. Hey, very close here. See, you might think they are the same line, but they are not. Let me delete these lines here because we might not need them. We'll put our new lines when we get there. See, sometimes, oh, look at that. They are so close, so close. Very, very close. Oh, now they are not close anymore. So don't worry about this because it only happened because we are scrolling through the history. If you are actually trading it, let's say right now, you wouldn't have any troubles knowing whether where they should be. Okay, you could see that they are two separate lines. All right. So now let's try to piece out some of the things we have learned. Okay, let's start from here. Okay, so let's start from, this is right now. Okay, let's start from this window here. Okay, so we go down. So you can analyze the first trade here will be your first entry. That is the trend entry. Okay, trend entry is the first trade here. Let me put a line there. Okay, that is the first buy. That's a buy entry. Yeah, just notice when the zero line was crossed. It's very close. Yeah, but it crosses zero line. Okay, that is first entry buy. Let's see, there's a sell here exactly where I have put my mouse here. This line, that's a sell because you can see yellow MACD crosses zero line. Okay, now okay, also you can see another sell here. Okay, you can see another sell there. Okay, and if you want to look at counter trend, because yellow MACD crosses again here, actually, yeah, around there, it crosses around, yeah, crosses around here, there about there. That's a sell. But you can see you have a lot of counter trend trade. This one counter trend trade for a sell, that's another counter trend trade for a sell. But you don't want to take this counter trend trade often because, as I said, like here is giving you a sell around here to sell, but you don't know at this point whether this is just a retracement or this is a full revise or a full trend reversal. You don't know yet, so that's why caution needs to be taking when you are taking the counter trend. For granted, here it seems to be a full trend change, okay, but here you don't know. Even here it's giving you kind of a, here is telling you that you can go you can short here, but you can't short here because this is just a short a retracement, okay. But if you take it, as we said, you look for smaller pip and you're out of the market very, very quickly. So let's see, this is a 1 hour chart. Okay, in a 1 hour chart you are looking for what? 20 pips profit. So 20 pips is going to be very easy to get. Actually, you got 20 pips on the first candle. 20 pips on the first candle. That I make it so easy to reach your target, but you can adjust your target later on, right? I make it easy because on this occasion you got quite a long way to go, over 330 pips, and you're only taking 20 out of it. But if you take 20 pips 10 times, or in a week, or let's say you take one trade a day on a 1 hour chart, one trade a day, and you make 20 pips or 40 pips a day, that's quite something remarkable. Okay, it's remarkable. Also, let's look at the sell. If you take that sell trade, you are looking for 20 pips. Okay, 20 pips, that's 22 already, and you got loads of pips available. That's 159 pips, something like that. So you got plenty to work with. So let's scroll back again and take more trades. Okay, guys, what is this called? What is this called? Somebody tell me what is this type of signal called? I'll describe it so that you know what it is. Okay, you have the white MACD still uptrend, because you can see white MACD never dipped below zero line. It's still uptrend, but you see the yellow MACD dip below its zero line and cross back up. So what signal did we call that in our training? What is that signal? Okay, because I'm I just want to make sure that you catch it, we catch it, you got it. So what is that type of signal called? We have 4 type of signal. We have the trend entry, we have the re-entry, we have the counter trend, and we have the divergence. So what signal is this called? Let me make a line. Put a line here. Right, round about there. Okay, maybe one back. Yeah, maybe this one. That is when the yellow line crosses its own yellow MACD crosses its line. Re-entry, thank you very much. Vincent, you got it. Vincent is 100% correct. It's a re-entry signal. You can see very good re-entry signal, but you can see that actually the trade has been in an uptrend way before then. But you want to jump into the trade, but you don't know when, because if you made a mistake of jumping here, you might be jumping at the wrong time. If you made a mistake, if you jump in here, you might be jumping at the wrong time. But this indicator just give you a window of opportunity to take part at the best time, when some of these people that bought at the high, they already came out because they hit their stop loss. they hit the stop loss. They bought here and they thought the price is going up. They hit their stop loss, but what happened? Price continues, and that happened a lot to traders. You got into a trade, it hit your stop loss, and it reverses and go in your direction. So you'll be wondering what is going on. Okay, what's going on is that you enter at the wrong time, because you could have waited for something to prompt you to get into the trade. So you can see from here, this is actually the beginning of this trend. That's the beginning of this trend. When the yellow line crosses yellow MACD crosses its line, that's the beginning of the trend, and this is when you re-enter. You can see here is a counter trend, of a sell, which looks good. But let's see another counter trend. This is another counter trend here. Let me put counter trend here. So the counter trend is not reliable. Sometimes it's very good. Like here, you can see that's a sell. Here is good. But let's look at the second sell of the same counter trend. Well, this is another one here. Here is a counter trend. But this one is not really good in terms of how many pips you're going to get. So that's why counter trend trade, if you still want to take it, you can take it, but don't dwell too long on it. Don't dwell too long on it. So let's see what we take out of this one. How many pips? This is still 1 hour. We're looking for 20 pips. We got, this is Euro dollar, Euro Australia. Here we got 40 pips already, you know. Here we got 275 pips. So quite a lot of pips on the table. To get 20 out of it, that should not be any difficult. All right, cool. So that is 1 hour. We can look at 4 hours. It's going to be exactly the same. If you like, we can change the, ooh, look at that trend. Look at that trend started here. Actually, the trend started here. See, this is when MACD crosses the zero line. It started right there. And the trend continues. Okay. Here, what did you see here? All right, you can see here, MACD, yellow MACD briefly crosses his zero line up and down again. Vincent, you know what that means again? You correct last time, you are correct again. That's re-entry. You watch again, see, is there any other place again that yellow MACD crosses his line? There is none again. Okay, so, and you get here until you are taking out here. This is now, this is where you are taking out of the trade. Sorry, this is a buy signal, right? But this is a counter trend here. This one is a counter trend, and this is a new buy signal, right? So these are 4 hours. So on 4 hours, you are looking for what? 40 pips. Easy peasy. This is already 100 pips, and you don't even want to know what this number is. 1,000. So it's very, very easy to get, right? It is very, very easy. So this can be used for any of these. You can use it on any pairs or even metals, indices, whatever you trade, you can use it on it, right? So it's not specific to a part. The only thing that's specific is the number of pips, because that 20 pips and 40 pips are actually designed for euro dollar. But when you're trading currency with a higher volatility, like Euro Australia, like GBP New Zealand, or Euro New Zealand, or Euro Card, all those ones they have a higher daily range, more than euro dollar. In that case, you may have to adjust your take profit target as well as your stop loss. Okay, that's just the difference, that what you have to work on. But to solve that problem, you can use an indicator called the average true range. The average true range can give you specific number of TP or SL, stop loss, that you will use. Let me quickly show you that. So let's say you're on this 4-hour chart. You insert indicator average true range. Okay, just say normal 14-day moving average, 14-day ATR. You add it. Okay, all we want to find out here is just the number. We want to know what is the ATR. So currently, you look here, the ATR number is 50 pips. Sorry, ATR is 183 pips. 183 pips. Sorry, 183.5021. Yes, that's 83 pips. 183 pips. That's a lot. That's a lot. So in that case, you could use ATR to. All right. Okay. Let's move to a better. Let's move to something where we recognize. Move to Australian JPY. Okay. In this case, this is 39 pips. Okay. So for Australian JPY, for example, this is 39 pips. So you can use 39 pips as your take profit, or if you like, you can say your take profit is twice the ATR. So your take profit is twice the ATR. You can use either that, or a fixed ATR value. Okay. So any questions? Seems that you understand it. Okay. So while you are here, I told you that I'm going to show you something. I'm going to give you something at the end, so don't go away. So I've given you the double MACD strategy, but over the years, I've known that to be successful is not just the strategy. You need to work on you as a person, as a trader. You need to work on yourself. So tonight, I'm here to give you an opportunity. So now that you are with me here, I don't want you to miss out on this chance. And what I've packaged for you is fantastic. I've got loads of stuff I'm going to give you, but you have to wait and listen to it first. So I packaged something that consists of loads of goodies, right? First one is I have 6-7 goodies here. First is that I'm going to give you a complete tutorial videos. Those videos are things that can help you to grow yourself as a trader. As a successful trader, you have a lot of other people that you are going to work together. I will give you access to recorded videos. Those recorded videos are worth $500. Also, 3 powerful trading strategies. These trading strategies worth over $2,500. It has made people have made money from using those 3 strategies. If any of the 3 is not something that you like, fine. I create another one for you. That is my specialty. That's what I love to do. I love to take on somebody and work with them. Let's do one-on-one together. Okay, I will give you that opportunity. If you want to do one-on-one with me, I'll give you the opportunity to do so, because there is nothing like holy grail or one strategy for everybody, or this is the one way everybody must trade, or everybody must be scalper, or everybody must be a swing trader, or we all must use indicators. No, everybody, everyone are different. You are different. Something that makes you tick doesn't make me tick. I could look at chat now. I'll be scared of 5 minutes. Somebody else will love that 5 minutes. Oh, yeah, wow, I love this action. See, everything is going up. It's up and down, up and down. Somebody says, oh, my eyes is just going to go blind. I can't see anything. This is too much. So that is why a bespoke system that works just for you is what you need. So also, you see, we're going to talk about fundamental technical trading. It's worth over $500. In fact, look at that indicator downloads. You can download indicators that we have built for you. Okay, we build these indicators specially, and the templates are there. Premium, you can download it from our site. So this is the special bonus offer. All this, if you tally them together, if you got calculator, put them together, you know how much they're looking at. Yeah, we're looking at quite 5K already. Yeah, 3.5, 4.5. That's 5,500 on this page. Now, there are other smaller bonuses that I'm going to add to it. Okay, tonight, just for you being here. So I'll give you access to my members only forum. So some of my members are on this live streaming tonight. Yes, they are on this live streaming. I'll give you access to that forum. It's no longer a secret. It's on Discord. It's on Discord. Discord server. So we have YourTradeMentor.com is on Discord server. So I'll give you access to that. Also, we have what we do regularly. We do a live trade review sessions. So you can participate in that. Look at your trades, see what you need to change. Also, some people prefer to just get signals and go and trade. So, you know, sometimes you pay for these signals. You know that. You pay for these signals, but we don't charge for signals. If you're a member, you receive our signals free. It's part of it. Well, we do analysis as well, trade analysis, impact news, you know, the biggest one, non-farm payroll, FOMC. We do all those analysis and we trade them. So you are welcome to join if you are interested in news trading as well. We release new videos very frequently, so you're also going to be receiving those videos as part of your membership. You have access to our expert advisor page. You can download it if it's something that you wish to do. And we have a live trading room where you are welcome to come in and come out. It's open. It's open room to everybody. Every member can come in and come out anytime they want. And you can discuss your trade, the trade you have taken or the trade you are about to take. And traders will help you there. So on this second page, if you just put your calculator on it, yeah, you see you are already close to 2,000 there. Okay, so if you add that to the previous page, you are looking at over $7,000, way more than that. Okay, so tonight, what is it going to cost you tonight? Okay, what is it going to cost you tonight? I have 3 packages that I've designed just for you. One is called the silver package, which comprises of every bonus and special bonus I've talked about, and it's only $50 US. Everything we have talked about is $50 US. Okay. Now, somebody will say, oh, you talked about one-to-one. What happened to one-to-one? Yes, the one-to-one is here. One-to-one. Me, I will speak to you. We are going to discuss and I will show you what you need to change or what you need to add or remove. So this silver package is $50 US, consists of everything we have talked about, all the bonus and special bonus that is worth over $7,000. You get all of those for $50. Okay? But why this gold package? The difference is just silver package in addition of a 1-day mentorship with me. So practically you get a day with me, talking with me, looking at your trade, adjusting the settings for your indicators, looking at your performances and helping you to find your way. So that is 1 day and it's a 2-hour in a day. That's a $200 US. But you have access to everything that we have talked about, all the special bonus and the bonuses. And what about the diamond package? Diamond package is exactly the same as the silver, but this time around, instead of 1 day for gold, it is now 3 days, 3 solid days, Monday, Wednesday, Friday, or Tuesday, Thursday, Saturday, or Monday, Tuesday, Sunday. Any day you pick, anyone that pleases you, because you will go on the calendar and select which days you want and which hours you want. You can spread it as long as you want. You can make it as short as you want. It's up to you. So ladies and gentlemen, these are the 3 packages to take you from where you are now to take you to where you want to go. Okay? We have testimonies of a lot of our traders who are on their way to that point. And if you want to join them, this is a big opportunity for you. So I want you to type in the box if you can, or if you want to, type in there which package you want to sign up for. Diamond, gold, or silver. Okay? Because I got something to give you. But I want you to say first before I tell you that. I want you to say first before I tell you that. I got something special coming. Okay, so, but you need to let me know. So if you want diamond package, type diamond. If you want gold, type gold. And if you want silver, type silver. Okay, good. Thank you for that. I'm waiting. By the way, I want you to click the like button. I've seen nine people have already clicked it. Please, can you click more? Click the like button. Let's get to, what shall we get to? Let's get to 15. Can we get to 15 like button, please? Let's do. We get in there. Okay. Right. So, if you are not from the United States of America and you are interested in any of this package, okay? All right. Demi, you want, what do you want? You want gold, right? Or silver or diamond, okay? Or you want all of it. Good stuff. All right. So if you are not in the United States of America, and you want any of this package, I got great news for you tonight. I got great news for you, because we have a partner who are ready to sponsor you. Is that not a good news? Yes. They want to sponsor you to get these packages from us. So rather than you paying us, this partner that's partner with us, they will pay us instead of you. You still get the quality training. You still get the mentorship. You get everything that we have discussed. But rather than you bringing either 50, 200 or 500 US dollars, our partner will pay it for you while you get the quality education. Okay, and you're on your way to breakthrough, to success, and to becoming successful in trading. Let me reveal to you what that partner says. Okay, in the next, here it is. Blueberry Market is an award-winning forex broker based in Australia. And they said to us, guys, we appreciate what you are doing in the forex community. You have trained hundreds, thousands of students successfully, and we have seen a lot of people have been raving about your performance and your help. We want to join with you, and we want to help your student as well. So they said they are going to sponsor your education with us. So, for example, the silver package, which is supposed to cost you $50, they will pay it to us. The gold that's supposed to cost you $200, they will pay it to us. The $500 for diamond, they pay it to us. What's the catch? Because there's nothing without a catch, right? So I'm always going to be open and tell you what is going on. Okay, there's no catch, but the condition is that, which of course, when you want to trade forex or trade stocks or trade anything, commodities, you need to open an account with a broker. So this is a broker. You may have a broker before, which most people do, but if you don't have a broker, this is a broker you can sign up with. So when you sign up with them, the sign up page will look like this. Okay, you put your name and everything they required, you sign up with them, and you credit your account with the money you want to trade with. This is your money. This is the money you will trade with. You can withdraw it anytime you want, but this is your money you are going to trade with. So depending on the money you want to trade with will determine which package they will sponsor. So they want you to, if you say you want to trade with $200 US and you deposit $200, that means they will give you, you were entitled to a silver package with us. We train you. If you deposit 500 or more, you are entitled to a gold package. But if you have over $1,200 or more and deposit into your broker's account, then we will train you and mentor you as a diamond package holder, which means you have 3 days partnership and 3-day mentorship with me. So that is the promise they made, and we've seen that they've fulfilled the promise. We are seeing few students that have joined them. Some students came directly to our website to sign up and pay the $50 or the $200 or the $500 directly. But some people use this broker. Okay, so let me quickly show you a little bit about this broker. I think you may have heard of them. I'm gonna bring their website here for you to see on a quick basis. So you can see this is Blueberry Market. They have a very nice spread. Their spread right now is 1.7 for euro dollar. Sometimes it's less than that. They have a good review on Trustpilot, Google, and Forex Army. They have, what is this? Okay, very fast execution. Or they have over 30,000 traders. What else? Very good support. You can check them out. Very good support, and they have a very solid way of depositing and withdrawing your money. It's as simple as ABC. Because one thing that is important in forex trading is you want to be able to get your money out, just like a bank. When you're putting your money in a bank, They don't ask any question, right? They don't say, who has the money? Where is it coming from? No. Say, oh, bring it here. But the day you want to withdraw it, now they will be checking, will be looking at the check. What signature is there? Or what bank? Why do you need money? Questions everywhere. So you have to make sure that the broker that you are going to use, they are brokers that you trust and that you can withdraw your money. And these people, we have made a lot of withdrawal through them, so we know that they will honor your withdrawal. And also, apart from this list, you can also deposit and withdraw through crypto. Okay. Let's say lot of instruments to trade with: Forex, shares, contract for difference, crypto, commodities, indices. And finally, it's so easy to apply. Just click that thing I showed you earlier. They verify you and you start trading right away. Now, what is most important to me is this regulation. I want to show you that they are regulated, and I want to show you where they are regulated from. Okay, these guys, you can see they are regulated by the Australian Security and Investment Commission. They call them ASIC. Okay, ASIC. You know that some of those brokers from Australia, they are reliable because the government there is as strong as the US government on regulation. They are as strong as European governments on regulation, different from maybe another person or company that is regulated from Seychelles, or from Bermuda or somewhere. Those are also regulations, but there are categories of regulations. So these are tier 1 regulations. Like IC Market is from Australia. They are also regulated by this ASIC. Okay, so they are reliable, dependable. If you have any questions at all, I think you can even go there and click this thing there and quickly chat with these guys, and they will help you out. It's so easy. All right. So, having said that, so who is joining tonight? So look at the offer and let me know which offer you want to take. Right? So you got the $50 offer, which is the silver package. You got the $200 offer, the gold, and the $500 package, which is the diamond. All right. So I'm looking forward to meeting you all, guys. If you have any questions, as usual, I'm here. You can type the questions and I will reply you. But first of all, let me send you a link, because you are interested in joining, but you're asking me how. How do I join? All right. So what I'm going to do, I'm going to send you a link to actually register. So I will send you a link to register with these guys, this broker here. There you go. So if you click that link, what it will do is it will take you straight to this page you are looking at here. It will take you straight here. And so simple, just put your name and details and click create account. You create your account and you follow their instructions. All right. Perfect. So guys, you are still here, right? You are still here. Thank you for waiting so far. Fantastic. Okay, so that is the link to register. And also, if anyone asks any further questions that we cannot solve or we cannot answer here on this live stream, the other best place you can grab hold of for us or me or my team is on our free Telegram channel. Free Telegram channel. Let me give you that link. So free Telegram channel, you come over there, you click the channel and you become a group member, and then you can chat me up. You can chat any member up, ask any question about any of these things we have talked about tonight. So fantastic. So thank you so much tonight. You've asked good questions and you've stayed very calm, and you've got the gist of the whole matter. So thank you, because now I am going to be rounding up, and anyone that has any issue, any questions, any query, anything, you can ask now or you can ask on Telegram. Thank you, Vincent. Thank you, Vintage. Vintage. For strategy is too much. For too much. Yes, that's what I said initially. Yeah, let me look at your questions, okay? So the signals, there are 4 type of signals. But I would say discard the number 3, which is a counter trend. You can take that off the radar because it's against the trend. But the first 2 are actually the main signals. The first 2, let me show you quickly. The first 2 are the main signals, okay? Because a good questions, it says 4 signals are too many. The first 2 are the best signals there. That's the easiest one to spot because the divergence also is difficult to spot. But the trend entry and the re-entry are so easy to spot, as you have seen. Look, we said here, I think that when we're on a 1 hour chart, okay, on this 4 hour chart, you can see here, that's a trend entry there. Straight away, that's a buy entry there. In fact, that looks like a previous, this is a previous day. And here, if you pick this one, that is a re-entry there. That's a re-entry for a buy. You can see the white MACD never crosses below, but the yellow MACD crosses and crosses back up. Okay, crosses back up here. Yeah, it crosses back up here. That is a buy again. So that's a trend that has been going on. You can see MACD is always above 0, never gone below 0, always, even up to now. So you can see this is another opportunity to buy again. So on this long trend, you have used 2 type of signals. You have used the first signal, which is the trend entry, and you have used the re-entry 2 times. Yeah, you have used the first, which is the trend entry, and then you have used first time re-entry, second time re-entry. You never know whether there are, oh, actually this is today. I didn't know that we are looking at today. This is right now. Okay, this is right now. This is right now. We are talking of right now. So right now, that's a re-entry for you because you can see the white MACD never go below 0, but the yellow MACD did dip below its own 0 and came back up. That's a buy. And for 4 hours, you say you are looking for 40 pips. Let's see how many we got here. We got 90 something pips there. That's more than 40. And this is a re-entry. And let's see how many pips we got for this re-entry so far. We got 200 and something pips, which is way more than 40 pips. All right. You can see here, what is this called? Counter trend. You can see a counter trend over there. It's already indicating that you should be selling here as a counter trender. But as I always tell you, that counter trend is like going against the trend. You can see we're in an uptrend and you already got a signal to sell. So be wary of doing that. Sometimes if this is actually the real turning point where this instrument is now going to turn from being bullish to bearish, you will have caught it at the right time. Yeah, if you sold here right now because of this cross and the price then came down here and hit this support area, you'll be like a star, right? You say you got at the highest point. You sold high and you buy low and sell high. So you are selling very high, which is good, and you are going to close your position when it gets down here. That is if this is the turning point. But you are not sure whether it's a turning point or whether it's just a small correction. It could have been a correction down to maybe Fibonacci level, maybe Fib level 23, and then off it goes up again. In that case, you will not be able to get too many pips before it goes back to its original direction. Hence, I hope that answers your question. Vintage. Okay, vintage. Thank you, Dave Hemperos. I'm Prodigy TBI. Are you still there? Are you still watching? Fortunate. And not Fortunate is always with us. Thank you so much, Fortunate. And everyone else tonight. You've been fantastic. You've been great. I hope you enjoy yourself. I hope you had good information. This information is good enough for you to actually go and trade it. You've got the stop loss set. You got the take profits set. You got the time frame that you are going to use. There's no ambiguity there. Everything is spelled as it should be spelled. So even this is a free training, but I have given you very good juice which can help you. But if you want to have more juice, you know where to go, right? So you got the link here which you can click to take you to our partner Blueberry Market, where you sign up. Or if you don't want to go through Blueberry Market, you know what? You can go straight directly to YTM. You can go straight to your YourTradeMentor website, and then you sign up. So if you get to YourTradeMentor.com website, you sign up, you just click register, and it will take you to registration page. You select either of those 3 packages, and you just pay for it directly, right? So let me quickly show you that. That second option. See, this is our website, YourTradeMentor.com, and when you click register, it takes you to this page. These are the 3 packages we talked about: the silver, the gold, and the diamond. See, if you don't go through Blueberry Market, you are going to pay for this. You're going to pay this on our website. But if you want to take advantage of Blueberry Market, you just sign up with the link I sent you earlier. That link, the link I send you, you can go through that link, okay? And then this $50, they will pay it. 200, they will pay for you. 500, they'll pay for you. You just have to fund your account with them and trade normally. They are reputable brokers. All right. Thank you so much, ladies and gentlemen. It looks like we should continue to tomorrow. But you know what? It's been fun. It's been great. And thank you for staying tuned. And hopefully we'll catch up again next week, which probably I will be coming with something that is going to be a surprise. So you want to come next week to come and check out what this surprise will be. All right. Thank you, Vincent, and everybody else. Good night, good morning, and thank you.